All right, so now we're looking at bad debts. Okay, this is the money that you are not going to collect from the people who are owing you. Okay, your receivables. Let's say you make a credit sale, right? Or maybe you do a service for somebody, then you record them as your receivable. You're expecting money from them, and then you do not collect it. All right, you fail to collect it. All right, so that's what we call bad debts, money that won't be paid back to you. All right, so the journal entry is you're going to debit the bad debts expense and you credit the allowance for bad debts. Okay, so as you can see in this question here, on 31st December, J Limited declared 20,000 as bad debts. Okay, the total amount for the trade receivables is 52,000. All right. So the journal entry for the year end is we're going to debit bad debts expense. This is money we have lost, so we just say bad debts. So we recognize it as an expense. So debit bad debts 20,000. Okay, this is an expense account, and you find it in your statement of profit or loss. Then allowance will credit allowance for bad debts, or sometimes called provision for bad debts. All right, 20,000. That's 20,000. So what's going to happen is this. As I stated earlier, the bad debts expense will be found in your statement of profit or loss. Then the allowance for bad debts is going to be subtracted from the total amount for your trade receivables. Okay, so on your statement of profit or loss, all right, let's say extract of statement of, statement of profit or loss, maximum statement of balance sheet, right? So you're going to have here current assets, all right? In your current assets, you're going to have your receivables, okay? You have your receivables, your trade receivables. Right, you're going to put here 52,000. All right, then you're going to say less allowance bad debts, okay, or provision of bad debts, 1,000. All right, so you're going to subtract this amount from your bad debt, from your trade receivable. All right, so your new figure for your trade receivable is going to be 52,000 minus 2,000, and that's 50,000. All right, this is from the balance sheet. Then on your statement of profit or loss, the bad debts expense is going to appear as an expense of the bad debts. It's going to appear as an expense, and it will be tabulated with the expenses which are subtracted from the gross profit.